All right, guys, let's go ahead and get started with the people that we have here today. So what we're going to do is, as you're coming in, just please let us know what city and state you're coming in from. If you're one of our international investors, please let us know what country you're coming in from as well. Feel free to put in your information there. Hey, Oscar, how's it going today? Nice to see you.
Hey, it's going good.
Good, and nice to see you here. Let us know what city and state. If you could share your contact info. I've gone ahead and put my full name, email address, and phone number. If you guys want to share your personal websites, that's even better. Let's see what else here. Okay, if you put questions in the chat box, let me know, because I'm not really looking at the questions, but I want to be privy to the fact if there's any questions in there. So definitely let me know if you sent a message there. Any questions? Okay. So just so you guys know, anyone who's put their email address will receive a webinar for first-time investors. That's going to give you a little bit more idea of what to expect when you're investing for the first time. Okay. And right, so let's go ahead and get started. So what I'd like for you guys to do, if you would unmute yourself, if you want to go ahead and start. But what I'd like you to do is just tell us your name and what you're currently doing in the multifamily space. And then we'll go around the room, so to speak. And when everybody has spoken, we'll go on and we're going to go ahead and do share the content. So who wants to go ahead and go first? Let me see a show of hands. Who wants to go first? All right, Don, go ahead. Since you raised your hand and you're unmuted, tell us your name and what you're doing in the multifamily space. Let's keep it brief so we give everybody time to go.
Yeah, no problem. I'll figure I'd go first. I actually need to jump off in like 20 minutes for another call I had scheduled ahead of time. But so for the multifamily space, I've got a few fourplexes, but right now I've started getting into the syndications. I'm actually working now as an LP on a deal for 225 doors in Amarillo, Texas. I'm trying to learn more of the process to eventually be GP on some other multifamily deals. So that's kind of where I'm at. Still kind of learning phases of the larger syndications.
Yeah, and I was talking to Don the other day. He's pretty humble. He's got a lot more deals going on, a lot more things he's been doing. So thank you so much for joining us today, and thanks for sharing. Who wants to go next? All right, go ahead, Brock.
My name is Brock Heider, and I'm in Atlanta, Georgia, and I am right now just passive investors on 2 properties, and I'm looking to do some different things, maybe get some quadplexes or different things on my own on the side as well, just to kind of expand my opportunities.
All right, thanks for sharing, Brock. Who wants to go next?
Cool, I'll go there, Carlos. So thanks so much for inviting me here, and my guest is Jose. And I've been involved in the lending business for real estate for about a month, thanks to Jose. And so Carlos is one of the first contacts that I've made in the multifamily space, so to speak. But I'm just here to learn and here to see how we can contribute and I'll collaborate as a community. I believe in people first and money second, and doing things for the right reasons coming from the heart. So I'm really happy to be here. Thank you.
Thank you, Matthew. And where are you coming in from, Matthew?
Toronto, Canada.
Nice. So we got some international fans here as well. So that's really cool. Welcome to the show. For those of you who don't know, this is Multifamily Investor Nation Monday Meetup. So thank you so much for joining us today. We're basically introducing ourselves. Brock is gone, Don is gone, Matthew is gone. Who wants to go next? I think Jose's on fire. Jose wants to go next.
Yeah, how's it going? Hey. Hey guys, my name is Jose Baeza, and definitely looking forward to getting a chance to know you guys. I have a couple properties here in Chicago, and more importantly, I have a lot of resources that have been in the new construction funding. That's what I do. I specialize in raising capital for entrepreneurs, including real estate investors. So that's my primary business. But yeah, definitely very excited to see being here.
It's our pleasure to have you. Thank you, Jose. Thank you for sharing. And Vinky, if you want to go next, please.
Hi, sorry, I was on mute. Good afternoon, everybody. My name is Vinky Lumba. I'm in San Francisco East Bay in California. I'm a multifamily investor syndicator and always looking for strategic partnerships with other people who are doing bigger and better things. And I'm here to listen to everybody's story today. And thanks for inviting me, Carlos.
My pleasure. Thank you so much for joining us. I really appreciate it. And yeah, you guys, mind you, we have a lot of great investors here, not just today, but on other days that visit this show very often. I also have my other meetup, multifamily meetup Mondays, which we also do on Mondays, but sporadically. But we do have a lot of investors that come join us. So not just today, but in the future, if you can come back and hang out with us and spend some time with us. And Oscar, I'm really excited to hear about you and what you're doing. So go ahead and share with us, please.
All right, awesome. So yeah, my name's Oscar. So I'm definitely in the education phase. I'm an active duty Marine stationed here in Jacksonville, North Carolina. My partner and I, we have a couple single family homes. We've done a couple flips. I have 2 rentals right now, but I'm kind of in the education phase and wanting to learn a little bit more about the multifamily side of the house. So yeah, here just to kind of, learn from you all. And I'm excited to be here. So thank you.
My pleasure. Thank you for joining us. And Ethan, I know you're just coming in. What we're doing is we're introducing ourselves. If you'd like, you could go ahead and introduce yourself. If you could get your audio on. If not, I'll just continue on with the content. So Ethan, I'm going to give you a second to see if you could come on and share your experience. I do have someone in the waiting room. Let me see who this is. Okay. All right. All right, we're letting more people in. So Ethan is going to pass for now. We got David coming in. David, as you come in, what we're doing now is everyone has introduced themselves. We only need yourself and Ethan to introduce yourselves. So I'll give you a second now to just tell us a little bit about yourself, David, and let us know what you're doing in the multifamily space.
Okay, David Monroe. I'm a CCIM. I'm also an instructor for the CCIM Institute. I teach market analysis, which is really fun stuff. I am building relationships, I should say strategic partnerships, with the active syndicators and sponsors that are currently in the trenches doing the deals right now, where I bring my expertise to the table, whether that's due diligence, market analysis, underwriting, acquisition, you name it, I can bring it. And I want a whole 0% of that GP. I'd like to get a little bit of an acquisition fee if I can, put it in on the passive side as a passive investor, and let's go do a whole bunch more deals that way.
That sounds good. Thank you so much for sharing, David. Yeah, and I was able to see David's last presentation on money raising. That was outstanding, and I wanted to thank you for sharing so much value. I really did get a lot of value out of it.
Thanks,
so
Carlos.
Thank you for that. I appreciate you. All right, guys. I think everyone has gone. I know Ethan is still having trouble connecting his audio. So Ethan, we'll come back to you. As you guys come in, though, if you would, please share your name, email address, and phone number, or any other contact information that you might have that you might want to share. And also, if you are coming in from another state, another country, let us know that as well. I know Matthew is from Canada, Toronto, Canada, and we last week we had people from as far as, where was it again? Scotland, which was really, really cool. That's the furthest we've gone out so far, so that's exciting. All right, guys. So without further ado, I'm going to go ahead and get started on the topic. And I learned something from David's last presentation. So David, this is in honors to you, sir. So here we go. I'm going to go ahead and share my screen with you guys. And I'm going to let you know what we could expect. Now, the good thing about this presentation, could everyone see my screen here? I don't hear anybody.
Yes.
Okay, good. Thank you for that. I appreciate it. All right. So basically, you guys see where it says here, how do you make money as a multifamily syndicator, correct?
Yes, sir.
All right, I appreciate that. Awesome. So yeah, so you guys know a little bit about me. My name is Carlos D. Reinoso. Okay, I am a co-organizer for Multifamily Investor Nation, which is basically this background you see here. So what that means basically is I put together these virtual meetups. We got more people coming in. With these virtual meetups, what we do is, you know, we bring out some information. Sometimes we bring out presenters, and we try to bring you some knowledge. If you would, please mute your microphones as you're coming in. And, you know, we try to bring you some knowledge, but not just knowledge. We're also here to network. And the beginning part of this, you know, we all kind of introduce ourselves briefly, and we'll get another chance at the end to introduce ourselves as well. I'm also the founder of Cant Major Investment Capital. That is my investment firm. We specialize in syndications. Up to now, we've done JVs and small multifamily, and now we're looking to syndicate larger apartment buildings. So we hope you could join us on this journey. And like David likes to say, and I totally agree with that, and a lot of other investors in this field, we're here to grow relationships, to start relationships, grow them, and grow together. So there's enough meat on the bone for everyone to get fed, and we could all join in on the table, and everyone could eat. So, you know, the thing about this whole process is I really want to get to know people, get to know you guys that are here today, and grow with you. And I hope that you guys would join me on my journey as we grow together. So thank you for that. I'm also a managing partner in my company and a general partner for other deals with other companies as well. I am the author of the book, Selling Secrets You Can't Afford to Miss. It's a book that I wrote to help sellers. Basically, if you're selling your single family homes, if you're looking to sell multifamily, if you just need some selling tips for any type of selling industry, this book is going to be very helpful. To gain a copy, all you got to do is send me an email, put the book title on there, Selling Secrets You Can't Afford to Miss, and I'll do my best to get you either a digital or a physical copy to your house. Thank you so much. So what can you expect today? Today, we're going to be talking about, you know, how to make money in multifamily investments. So like I mentioned in the beginning, if you've entered your email address, you're going to be getting the how to get started in multifamily investing webinar video. That's going to be sent to your inbox, and that's going to be available for all the attendees that go ahead and give us their email information. Excuse me for a second. Right. So what we're going to be doing today, we're going to be having plenty of networking opportunities. We had some right now at the beginning. Everyone's been able to introduce themselves. We're going to jump into the content. We're going to do a little bit more networking. And at the end, if everyone is still here, we're going to go ahead and do a smiley photo. Hopefully everyone could put in a nice smile, and I'm going to go ahead and post that everywhere. And it might even be my thumbnail for this video on YouTube. So I hope you guys could join me for that. And hopefully you guys could stick around to the end as well. Now, how do you make money as a multifamily syndicator? That's our topic for today. Now, the best way, and I want to go ahead and have you guys here so I can take a look at you guys as I do this. So the best way to do this, the first fee, so there's actually 4 fees. The first fee that we're gonna tackle today is going to be the acquisition fee. So the acquisition fee is basically the fee that you're going to get when you first take down a deal. Now, who here, raise a hands, who here has done a syndication where they've been the sponsor or the co-sponsor or a GP? Could you raise your hands? Okay, so I got 1, 2. Bear with me. I'm going to jump to the other room and see how many I have over here. Okay. Okay, so we got 3 people who have done it. So thank you for that. I really appreciate that. And okay, so that you guys know about these fees and what to expect. Now, the other fee that you could look at is the asset management fee. Now, with the asset management fee, there's about 3 different ways that you could go ahead and charge the asset management fee. You could base it on the overall value of the property paid annually. So whatever you're making annually, you could charge up to 25, up to 0.25 or 5% for the asset management fee. Excuse me. The other way, if you're based on total equity required to acquire the property, in other words, if you could base it on the total equity that you've acquired in order to purchase a property, and in that case, you're looking at 0.5 to 5% would be the other way that you could charge an asset fee. And the other one is based on the overall gross collections of the asset. And this is most common. This is the one that most syndicators use, and it's basically anywhere from 1 to 3%. So those are so far we've covered acquisition fee, which is 1 to 5%. The larger the deals, the lower the fee. So if you have in excess of, let's say, 200 units, you're possibly going to be looking at the lower end of this fee. So you're looking right now anywhere from 1 to 5%. If you have 200 units or more, then you're probably going to be looking at 1 to 2% max. With the asset management fee, there's 3 different ways to go about charging it. And the best way, the most common way, I should say, is going to be based on overall gross collections of the asset. Now, the other one is called the refinance or disposition fee. So does anyone know what a refinance is? When do you do a refinance on a property? Anyone have an idea and would like to share it? Okay, so if not, okay, go ahead.
Well, I was going to say I'll let other people answer.
Yeah, I know you can answer all the questions, and that's cool. And I would love for you to. But yeah, I mean, go ahead, Dave. If you would, please share it with us. Let us know what
typically when you're syndicating, if you're doing what I call the 5-year flip model, which most syndicators do, somewhere between 3 and 5 years in the investment, they're going to either sell the asset or refi out. You've got others that will also do that 5-year flip model, and around year 2 or 3, they have a plan to refinance out the bridge debt that they used in order to do the rehab project. Bridge debt would be the loan that you get that isn't a permanent loan. It's typically interest only. You'll have a little bit higher of an interest rate. Depending on who your lender is and your experience, will depend on whether it's recourse or non-recourse. You can find non-recourse bridge loans. I'm hearing here lately, there's a lot of people saying they're not finding non-recourse, but non-recourse is definitely an option for bridge. But all you're doing is refining that out. If you've done your job correctly, you should be able to have put enough value into the asset that when you refi out, you can do a 65 to 75%
LTV
cash out refi, so that you can pay all the capital back to your investors and you can just enjoy some good cash flow for the remainder of the period. That makes them really happy.
Yeah, that's a great point. So that's another point that I wanted to bring up, is that when you do refi, you could charge that refi fee, but you want to keep in mind, and I think this is in general, you don't want to overcharge too many fees. And the reason why is because you want the deal to still pencil. You want the deal to still work. You want to make sure that, yeah, you're getting what's due to you, but at the same time, you want to make sure that the investors are still pulling out the returns that you promised, and even better if you could outperform your conservative underwriting as well. So keep in mind, you could charge all these fees, but it's not you're not obligated to. Okay, so when you refi, usually it's 1 to 3% of the sales price. And again, if you want to make sure the deal pencils, you could waive this fee and not necessarily charge it. And fee number 4, would be the property management fee. And with the property management fee, there's 2 ways to go about it. If you're vertically integrated, then you'll have your own property management company, and you could go ahead and say, okay, I'm going to charge this fee, and The fee, I'm going to tell you right now how much it is, but basically you could charge it if you have property management vertically integrated to your own syndication. Now, if you don't fret. You could still count on third-party management, and they're going to charge typically the 1 to 3%, and it varies by size. All of these vary by size as far as the fees. So you'll get the higher fees with the smaller properties, and you'll get the lower fees with the big multifamily properties. And again, if you use third party, then it's usually anything, I guess, from 3 to, I've seen from 3 to 5, but you know, it could be from 5 to 7% as well. And if the larger, there we go, with the larger assets, you'll see that it's usually 3 to 5. So that's what I've seen as well. Any questions so far, guys? Awesome. We're almost done, actually. So now we're going to jump into the less common fees. And the reason I like keeping it brief is because I like to give you guys more opportunities to network. So we're going to jump into that in just a second. Now, with the less common fees, there's also 4 of these that are less common, but you'll still see them in your deals. And one of those fees is your broker commission. So 2 things with that. There's 2 sides of the broker commission. In the first instance, we're dealing with the seller giving the broker the commission to broker the deal, right? So this broker, he listed the property, he's done most probably operating memorandum and offering memorandum. He's also doing, you know, the pro forma on the property as well. So he's getting his commission. And again, that's usually anywhere from like 3 to 5%, depending on the size of the deal. And then you got the brokerage commission for the selling asset. And this is less common. And the reason it's less common is because most syndications only have the listing agent as the broker, and rarely do they have a broker on the buyer side. And if they do, that buyer is going to also be the investor in the deal. He'll be a co-sponsor or a syndicator. I myself am a broker, so I could charge a fee if I wanted to, a brokerage fee, but I don't. And the reason why I don't is because I get my money through the acquisition fee and I get my money through the asset management fee. And the reason that I do that is because I want to give space for the investors to make the absolute best returns possible. All right, guys. So if I charge a brokerage fee, acquisition fee, asset management fee, property management fee, like I'm not leaving any meat on the bone, right? So the investors are going to go, well, Carlos, yeah, you promised a 7% return, but look, we're only getting 5% this year. So one of the ways to avoid that is to charge less fees. So always keep that in mind. Just because you could doesn't mean you should. And the other one is the construction management fee. And this one, most commonly, is going to fall under the property management side, unless you have a construction arm of your company or you're partnered with a construction company that they handle the construction management, right? If you don't have that directly, chances are your property manager is handling that for you, or you might have it vertically integrated into your company, which I do know some syndicators that they have that format where they go ahead and they say, okay, we're going to syndicate and we're also going to do the construction management as well. And what they do also is that they hire out the third-party management. So that seems to work very well, and I've seen a lot of people have success with it. And lastly, and least common of the fees, I would say, is accounting and tax fee. This is basically the fees that your accountant's going to charge to do your K-1s at the end of the year, the bookkeeping, making sure that all the document and preparation has gone into effect. They're going to make sure that throughout the year they're doing the bookkeeping for you, and that takes time, that takes effort, and so we want to make sure they get their cut as well. And again, this is usually anything from like 1 to 2%. If you guys have seen it any different, let me know. But what I've seen in my own experience has been 1 to 2%. And it's usually, for the, usually for the K1s and the bookkeeping that takes place throughout the year. Okay. And then, now the best way the syndicators make their money is upon the exit. So when you go to dispose of the property, you go to sell your property, that's where you're going to make most of your proceeds from the sale of the asset. Now, there's a lot more that gets involved with this. We could go into splits, we could go into waterfalls, bad boy carve outs and stuff like that. But that's way too detailed, and it's not really the topic of choice for today. So today we're going to keep it based on the 4 most common and 4 less common fees that are charged. And again, once a syndicator makes the money, once they sell the property, they're going to make the largest portion of their profits. And that's also where the investors are going to take, whatever their 2x profits or 3x profits, whatever the case might be, upon disposition. Now, one thing I neglected to mention, I'm going to go back to number 3 on the most common fees, and that's the refinance or disposition. So when you refinance, a lot of times you're going to give your investors their money back. That's where you're going to be able to pay them all their money back. And it's the best time because you have investors that are like waiting to see how long is it going to take to start, getting their money, on a either monthly or quarterly basis. And, they're getting their little bit of money every month. The way we do it, we want to do it quarterly because I think it's just less work throughout the year. But when we refinance, we pay them back all their monies back. So the investors are basically, they'll stay in the deal, and it's more like an infinite return, if you will, because now they've gotten all their money back, but they still have ownership in the deals. So the way we try to organize it basically is we do a 6 to 8% return, depending on our own returns. And if you're getting a 6 to 8% return, that means that before we get our money as the investors and syndicators, the first monies that go out are going to be to the investors. And the basic splits, you have different splits. You have 80-20 splits, which is 80 to the investors, 20 to the general partners, or you do 70-30, which is 70 to the investors, 30 to the general partners. And especially over here with the acquisition fee is basically it goes into cover like the expenses. It offsets the cost of the deals that the syndicator puts together, right? So that's why you want to get an acquisition fee, because it does take a lot of work to organize these deals, to put these deals together, to do the legwork, to work directly with the sellers, to get off market deals. Some people pay for co-star, and these things are expensive, and they have their cost, and they have their time restraints. And so the acquisition fee is going to help you to offset these expenses. And so I've gone over the 4 most important, the least common fees when it comes to the syndications. And very important, and this is like gold and pretty much one of the most important key takeaways, is all fees should be outlined and disclosed in the PPM, which is a private placement memorandum. And you definitely want to make sure that it's disclosed, because if it's not disclosed upfront in the PPM, then you're probably not going to be able to charge it later. And if you do try to charge it later, you might come across some problems with the investors. They're not going to be too happy. And you might even have problems with the SEC when they check out and they say, oh, you weren't supposed to charge this fee because you hadn't disclosed it in your PPMs. So you really can't charge this fee. And if they do let you do it, they're definitely going to give you a slap on the wrist or worse, for not disclosing it. So, in real estate, disclosure, always make sure that you disclose everything. You want to be transparent, and you want to make sure that you disclose to your investors everything. So later on, there's no misunderstandings, and you keep your investors happy so they can continue doing deals with you. And that's just about it. So that's my presentation for today. I thank you guys for sticking around. And here's my contact information. Let me go ahead and place this here. So if you guys want to go ahead and take down, my email address is here. My cell phone is here. I do have another show. It's called Multifamily Meetup Mondays. It's similar to this. The only difference is we'll have another presenter, and we're going to go ahead and bring the presenters on, and they'll go ahead and do a presentation. We'll do some breakout rooms. So I hope that you guys will join us for those as well. And one of our guests in the very near future is most probably going to be Jose Baeza, who's here today. And also David has been invited as well. So I'm hoping that he could be a presenter for us. And I look forward to any questions. So now's the time. If anybody's got any questions, don't be shy. Unmute yourself, and then we'll know that you want to go ahead and talk next. And I'm going to leave this screen up here just a few more minutes in case anyone wants to take down the information. But I want to go ahead and let Linky go. I believe she has a question. So Linky, go ahead with your question, please.
My question is for you regarding the closing cost. So is it like closing costs comes under your category 3, I think that was you mentioning about the brokerage fees and all that. That's where the closing cost is?
Yeah, so the closing cost is going to include everything that goes into the closing of the deal, right? So you're going to have the closing attorneys. You're going to have everything that we mentioned today. It's going to be in the PPM, and it's also going to be in like a HUD statement, if you will, but it's different from multifamily. But there is going to be like a closing statement, a settlement statement, and there the closing costs and the brokerage fee and everything else will be detailed for you there as well.
But how much is it exactly? I mean, approximately the closing cost.
Yeah, so my experience has been that the closing costs, and anyone else could chime in who's got experience if you've seen anything different. My experience has been up to 3% is usually the overall, depending on the size of the deal. If you have a really big deal, like let's say I've seen, 400 units plus, then you're probably going to be looking more at 1 to 2% of closing costs.
Thank you.
Yeah, thank you. Great question.
So I had a question with regards.
Sure.
So you mentioned when you refinance and you pay your investors, you still have them in the deal, do you, throughout the life of the however long you refinance for? Is that how you structure it?
That's exactly right. And that's one of the beautiful things when you do a syndication, you have that option. Some investors, once they, I shouldn't say some investors, but I've heard of cases, I've heard of cases where people go, I tried to, I've already refinanced and I got my money back. And then they say, okay, the investors are out of the deal. So now the only ones that stay are the GPs, right? And the way we structure deals and the way I was taught, by Dan Hanford and other people in the industry who got the experience is basically you want to keep the investors in. And it just makes sense because if now, Oscar, you and I took down this deal, I gave you your money back, let's say you made a return on it already, you've got your money back, but what are you going to do with that money?
Yeah, I'm going to be more likely to want to invest with you on other deals. So
exactly. So what I want to do is I want to make sure to keep you in that deal, keep you with ownership of that deal, and that's where that 70-30 split comes up. And you're gonna keep 70% of the sale, and we're gonna keep the 30%. My team and I. So that 30% will be for us, but you're still in the deal to the very moment we sell the deal.
Yeah. I guess that was kind of leading into my next question as well with regards to like the capital transaction fee or the fee at the end. Now, is that when you part ways? So because you're not refinancing, you're you're selling the asset, that's when you pay your investors, and then there's no longer a split at that point when you
Right. So you're selling along, you're paying them back along the way, right? So every month or quarterly, or however you want to pay your investors back, they're getting a little piece of the money that they've put in the deal, right? Then on top of that, then there's you could call it a capital call, if you will, which is when you refinance. And when you're refinancing the property, that's when, again, if everything went well, you added value on the property, the NOI has gone up, the property value has gone up, and now you refi. So let's say you started at $2 million property, you refi, now you have a $5 million property. You've given the investors all their money back, and the investors are like, well, great, now I want to invest in something else. But you set it up from the get-go, and you let them know, no, you guys are still staying in the deal. We're going to keep you around. Then let's say 2 years later, that was year 3, right? 2 years later, you decide to sell. Now the property is worth $7 million. Now you're going to give your investors back 2 or whatever, 3 times the return, right? And that's, what happens is when you give your investors 2 or 3 times their money in a short amount of time, that investor is going to be happy. They're going to want to keep investing with you, and you're going to build that relationship that's going to be everlasting. I call it evergreen, and you're going to keep that investor around forever. And like with me, I've been in real estate for over 20 years. I've established relationships with people where I'm still invited to their sweet 16s, to their weddings, to vacations. And every time I go to Florida, I vacation with some of the people that I used to do business with over there. So we still remain friends, and that relationship is still important to me. So I think that build these relationships. You keep your investors happy, and as long as they're happy, they're going to want to keep investing with you.
Yeah, no, that's great. Thank you.
Carlos, can I piggyback on that?
Please, I wanted you to. Please go ahead.
So one thing you do and there's 2 types of return when you're going through the life of your investor through operations. You have return on the investment. That's typically those distributions that they're receiving. That's not return of, not yet. That's return on. Okay. So they're just getting dividends from investing their money, much like you would in the stock market. Once you do a refi, if you can do that cash out, that is a return of. When they get that return of, and you're able to give them back their entire capital that they invested at that point, and you have to disclose this in the beginning with the PPM, you can say, once, let's say you're doing a 70-30 with an 8% preferred return to the investors first. When they get all their money back in that return of, they're still staying in the investment until we sell it into the future. But you could do a couple of things there. You can either say, okay, from this point forward, there is no more preferred return. You got all your money back. So now we're straight 70-30. Actually, what I do, and when you get a little experience, you can do this. In the beginning, probably not. It just depends on how hard of a time you're raising in your investors. But once they get all their money back, I say from now on, we're split 50-50. Investors, you get 50%. Sponsors, you get 50%. And then it's pari passu between the sponsors and the investors as to how that works. But that all has to be spelled out in the very beginning. Yeah. And then at resell, or when you sell the asset, it goes back to that 70-30 again, because that's what it was in the beginning. So you can go 70-30 with a preferred till they get their capital back. Then you can go 50-50 with no preferred. And then at the very end, you still split it 70-30 as was described in the PPM. That's a pretty typical structure.
Exactly. And that's like he said, it's typical structure for the most part. The simpler you keep the PPM, the easier it is for the investors to understand, and the easier it's going to be for everybody. So that's really the structure that I use. I like to keep it as simple as possible. And if I've given my, if I've performed according to the business plan, right? And if I've performed according to the PPM, then I've earned the right to say, you guys, let's split this 50-50. Now you got your money back, you got your capital return. Now let's do this 50-50. And then when we sell, let's go ahead and go back to the original 70-30, 70 to the investors and 30 to, I'm going to stop sharing because I have like 6 people in the waiting room. Excuse me for a second, guys. And I've lost track of the waiting room. So my apologies for anybody who's still there. Okay. I might have lost him over time here. Okay. But that's a great question, Oscar. So thank you for asking that.
Carlos, I got to jump. My wife just got home. I got to give her 10 minutes, and then I'm jumping on another call here in 10 minutes.
Sounds great. Thanks for joining us. I
for having me,
appreciate
bud.
you. My pleasure.
Bye.
Thank you.
Bye.
All right.
Bye,
Thank
BB.
you.
Bye.
All right, guys. So that's basically everything I wanted to talk about. You guys have any other questions? If not, let's just talk about open forum, whatever you guys want to discuss. I did want to say one more thing before I forget, which I almost forgot, which is that next month's topic is going to be on performing due diligence on your multifamily deal. So that's really one of my favorite topics because there's so much that goes into the D&D of the transaction. And then, like you mentioned, Oscar, and other people have mentioned that you do single family or smaller deals. When you get into multifamily, there's a lot more that goes into it. So it's the same thing, but just think there's a little bit more that goes into it, right? So it's a bigger beast for sure.
Yeah.
All right. So let's see what else here.
Do you typically factor in into your deals, or is it kind of just is it appropriate?
What do you mean? Say
Like,
the
do you
first point.
when you're planning on when you're presenting it to the investors, do you kind of always plan on having a refinance in there, or do you just wait and kind of see how it works out?
Yeah, for the most part, I plan to have a finance portion in there because the interest rates could fluctuate, right?
Mm-hmm.
So sometimes I've seen where people have to get the deal with the interest rate from the previous owners, right? They're basically assuming the loan, right? So sometimes if you have to assume the loan, you don't have a choice. But if you have a choice and you want to put, let's refinance, I typically will. And like right now, just a year ago, the interest rates were 4 or 5%, and now they're 2 to 3.
Mm-hmm.
Right. So if that's the case and you've had the property 2 or 3 years, let's say if you had right now, we're in 2021, you had a property back in 2018, this is a perfect time to refinance that property.
Mm-hmm.
And I'd love to refinance whenever possible. It's another opportunity to possibly get a fee for myself. But on top of that, it's the best opportunity to pay back the investor. Right. Mm-hmm. And the sooner I could give the investor back their money, the higher my cash on cash is going to be, right? Because cash on cash is basically based on the time value of money, if you will. So, Great question. Awesome.
Go
ahead.
I'm sorry. Yeah, I had another question with regards to structuring the splits. Typically, you said like 80-20 and 70-30. I guess scenario based, say like, depending on your relationship with those investors, whether they're like family, friends, or colleagues, or people that you work with that see what you're doing and they're interested in it. How do you go about approaching, say, like family as opposed to other investors with regards to splits? Is it based on, obviously, for you having the experience, it's going to be based off of your experience, your character, your relationships with those people. But how do you determine, hey, 80-20 equity split or a 7-30 is the right one?
Yeah, so there's a lot that goes into that, right? So I mean that's a broad question, and let me tell you, it's a great question. So basically, look at it like this: if you're bringing in, let's say, $100,000 of your own capital to the deal, and you're going to raise $1 million additional for that deal, so you should definitely get more than just a 30-70-30 split, right? It's just you're putting in a lot. You're doing the legwork. You're doing the capital raise. You're putting in your own capital. You're raising capital. So you're not just somebody who is just bringing the deal, right? And that's it. That's all they've done. All I did was bring the deal, and my partners take care of the rest, and that's all I got to do. There's so much more you're doing, so you should deserve a bigger part. So like, let's say not 70-30, but let's say you're starting with 80-20. But you're bringing in your own capital, plus you're raising capital, plus you're going to do the asset management, you deserve a bigger portion, right? So any honest investor, and most are, let me tell you, in this industry, 99.9% of the people are amazing, super honest, super trustworthy. This is, for me, like one of the best industries to get in, period. But when you're working with these people, they're going to tell you, so Oscar, okay, you're not bringing any money to the deal. Okay, are you bringing the deal? No. So what are you? You're a GP. You're bringing, let's say, 25,000. Okay, so we'll break you off 5%. Let's say, hypothetically speaking. But so in other words, the more you bring to the table, the more you could have the power, the negotiation power to say, hey guys, with what I'm doing, I feel like I deserve a bigger piece of the pie. That being said, I've worked with investors, and Vinky could collaborate this probably, where they'll tell you it's based on how much you're bringing in capital.
Okay.
So we're part of a GP team. We're all managing partners right here, and I'm bringing 100K, but you're bringing 20K. Do you deserve the same amount that I'm getting? The same split? Not really, right? So that's, you kind of want to, it's all negotiable, but there's certain standard across the board rates that most people go with. And that's why you'll hear 80-20, 70-30, 60-40. And it's hard to find like a 50-50 when you're first getting started, or anything higher than that, right? So yeah, another great question. Thank you. Awesome.
Thank you.
Yeah, thank you. Anybody else want to share something? Wayne, we all introduce ourselves. I'm not sure if you might want to introduce yourself.
Hey, sure. Can you hear me?
Yes, sir. Loud and clear.
Oh, awesome. Yeah, I really enjoyed this. I was a little late wrapping up with work and everything. I'm a business owner. Have been for the past 15 years in the IT and management consulting space, but just interested in switching gears a little bit into real estate, and preferably into multifamily investment. So just really joining more of these groups, trying to learn and network and connect with other people who know more than me. So this has been very informative, and definitely appreciate you guys doing this today.
Oh, thank you. It's our pleasure. Thank you for joining us as well.
Yeah.
And I wanted to say, like all of us, we went ahead and shared our contact info. If you would be so kind, just, you don't have to put anything that's too private or anything, but whatever you feel comfortable sharing. And if you do have like a website you want to share, you could go ahead and share that in the chat box as well.
Okay, sure. Thank you.
Appreciate that. Thank you. Really appreciate you coming today. Anybody else? Any other questions? All right, guys. So I did want to tell you something else, some announcements. Like I said, next week, it's going to be all about next month, actually. So we meet on the first Monday of every month. So the next one is going to be in May. I'm not sure exactly the date, but it'll be the first Monday of the month. And I also have a YouTube channel, and I'd love for you guys to subscribe there. Basically, you go to Carlos D, as in David Reinoso, and you can see my name up here in this portion here in yellow, right under my suit there. And so basically, go there, find me on YouTube, like and subscribe. I promise to keep bringing you good information. I promise to work hard to learn more, to gain experience, to do deals, to take down syndication so that I can bring that information to you guys. Thank you for sharing, guys. I really appreciate that. And I would love to see you guys there. Also, feel free to connect with me on LinkedIn, one of my favorite places to network. And if I could introduce you to anyone, it would be my pleasure to do so. I do have a lot of connections in the industry. And recently, I was asked to be on Real Estate Investing Rocks, the Spring Summit, and Vinky was there as well. We had a lot of fun. Yes or no? Yes, we did. And we all were able to network there as well. I will be participating next, I believe in September on that one as well. I hope you guys will join us. And lastly, this is Multifamily Investor Nation. We do have another summit coming up in June. You could use my promo code Carlos100. I'm going to go ahead and put this in the chat box. And with this promo code, you can save $100 off the price of admission. And I would love for you guys to join us there, because Brock could tell you he's met Dan Hanford. He's invested with Dan, who's the leader of this group. and it's a great place to find other investors who have the experience and who are willing to share their knowledge with everyone. I've been in the multifamily space now for some years and getting into syndications in the last 2 or 3 years. And most of what I've learned has been through these very giving individuals, the investors that have shared their knowledge. I did mention, so I just want to bring it up just briefly. This is my book, Selling Secrets You Can't Afford to Miss. If anyone's interested, I'd be happy to share either a hard copy. Yeah, so send me, I have your email, just put, if you would send me an email, and in that email, just put the name of the book, Selling Secrets You Can't Afford to Miss, and I'll go ahead and send you either a digital or a physical copy, depending on what I have available. There's only 10 in stock, so these are one of a kinds, right? And another great book, I was reading it, so I didn't bring it, but it's basically Joe Fairless's book, The Best Ever Syndication book, I believe it's called. I highly recommend that book. It looks like a red Bible. It's really, really thick. And bear with me for just a moment. I'm going to step out for less than a minute, and I'm going to come back with the book because I really want you guys to know about that book. So bear with me for just a moment.
So by the time he's looking for a book, I wanted to mention something.
Please.
I have a meetup this coming Friday, and I put a link in the chat. Please feel free to join. It's 3 p.m. PST. And then Damian Lupo is going to be there. He's the EQRP expert. So we're going to be talking about how to leverage your 401k or your retirement funds and invest in real estate.
Okay, thanks.
Thank you. Yes, the sign up link is in the chat.
Thank you.
I have one of my passive investing is through the Roth IRA right now. So I've been able to use that to get started. That's actually how I got started, because I didn't have that kind of cash just lying around.
Right. I think a lot of people, they forget that they have that cash sitting there. And then it's a good idea to use that and multiply tax-free money. Why not? I do that too. And anybody's looking quickly to park their money, I do have one deal too in Houston, Texas. I'm using your absence, Carlos.
No, please. I like that. And it's good. You guys, let me tell you something else about this meetup. This meetup was originally in person, right? And I literally saw people sitting down on the table and writing down deals and taking soft commitments from investors. That what I'm trying to say there is that I've seen meetings get started in this meetup. So by all means, Vinky, I would love for you to thank you so much for sharing that. And I'll go back and review it. So I definitely want to be a part of it. So count me in. Please send me the information and help each other out, guys. Angel helped me out. I was on her podcast earlier today. REI Rocks podcast. Is that what it's called? Yeah. And Vinky is also has hers. Join her, help each other out, help other people, promote other people. And this is what it's all about in this industry. It's about helping each other, coming up together. And, I want you to think abundantly. There's a scarcity mindset and there's an abundant mindset. In real estate investing, think abundantly. And I think you're going to have great success. That's it. Anything else for today? Anybody else have anything they want to share?
No, that's about it for me. I shared my deal I have in Houston. Somebody wants to check it out, let me know. I can send you the details. And please join the meetup on Friday. And also, I would like to invite you to my podcast, Carlos. I think I did mention last time too. So I'm going to sending you the details.
That sounds great. I'll definitely join you. If we could have a quick photo before we go and just a quick smile on everybody's face, I'd really appreciate it. I'm going to try to get it through my phone because I don't know how to do it through Zoom. Let's see here. Okay. All right. On the count of 3. 1, 2, 3. Awesome, guys. Thank you so much for your time today. I had a blast. Keep in touch, please. Brock, you and I are going to keep in touch for sure.
Yep. I'm going to try to catch up with you because what I think I need is just to walk through a deal, walk through some of the stuff just firsthand. Because I think I'm on information overload is a good way to put it right now. You look at so much. So, yep, I got that today in the mail, actually. So I got to read that too. Yep.
Okay, this is for Oscar. This is Passive Investor. And for Wayne and anybody else who watches it, this is a Passive Investor. This is a monthly newsletter that Dan Hanford sends out with a passive investing team. And, a lot of times they'll have like a coloring page on here. So what you do with this, you can see it's a little drawing. I got people coming back in here. All right, that's awesome. And basically, it's a good way to talk to your family, maybe bring your kids in on it. So I think that's really cool. They do that. And you could also subscribe. Go to passiveinvesting.com, subscribe there. But I wanted to tell you guys the next summit for Multifamily Investor Nation is in June. And again, you can use my promo code Carlos100. You'll save $100 off the price of admission. But you guys, it's 3 days, Thursday, Friday, and Saturday, and it's information overload. The best part about it is you're going to have a video. You're going to be able to have like access to the replays for life.
Right.
So if you can't get all the information you couldn't make one day, you'll still be able to keep the recording. Go ahead, Wayne.
Oh, actually, I was just going to ask that event that you just mentioned, where the code is Carlos100. Did you share that link already in the chat?
Yeah, it should be in the chat box.
Okay.
Yeah, it's there. Yeah, it's there.
Okay.
Carlos100.
Okay.
Yeah, and then that way you'll get a good discount, $100 off. Plus, it'll let them know that people are coming in from the meetup straight to the summit. But let me tell you, I go to just about every single conference throughout the year, and not just because I'm a co-organizer, but the reason I became a co-organizer for this group is because I love everything that they do, and this truly is my favorite summit of the year. And anybody who's gone could attest to it. There's a lot of information, especially on capital raising. It's the best summit that I've seen on capital raising so far. So that's it. Thank you so much, Don, for coming back. I appreciate that. Thank you, Wayne, for joining us. You guys, it's really been exciting to have you. Please join us again next week, because I really want to, next month actually, really want to make this a monthly thing where, you guys' faces become more and more familiar. We get to know each other, and who knows, like I was mentioning, we might end up partnering on deals. So thank you guys for your time. I really appreciate it. I hope you had a great Easter. And whatever other holidays coming up, enjoy that one. And we'll see you guys next time.
Thank you.
Thank you.
Yep, bye.
Thank you so much.
Thank you, guys.
Take care, guys.
All right.
Bye.
Bless you guys. Take care. I'm going to stick around. All right, guys. So thank you so much. That was Multifamily Investor Nation Monday meetup. Where we're talking about how do you make money as a multifamily syndicator. As you can see, we had a lot of happy people. We had people come back in after they had to step out. That's how much they were interested in what was going on. So we're really happy that you were able to join us. Definitely check out my YouTube channel. That's Carlos D. Reinoso, as you see right here on YouTube. Check me out, same name, on LinkedIn. You can also check us out my Facebook page at Canis Major Investment Capital. That's Canis Charles Alpha Nancy India Sierra, Canis Major Investment Capital.com on Facebook. And also hit me up on my personal Facebook page, Carlos De Jesus. That's Carlos D-E-J-E-S-U-S, Carlos D-E Jesus. You could find me there. And I would love to connect with you guys. If you guys have anything going on, a podcast, a YouTube channel, whatever the case might be, I would love to be a part of it. I would love to help promote it. It's my way of adding value, of giving back to an industry that has been great to me. So thank you so much. And once again, guys, thank you so much for joining us. We'll see you next time on performing due diligence on multifamily deal for Multifamily Investor Nation, Multifamily Monday, Meetup Monday. This has been Carlos D. Reinoso signing off. Thank you so much for your time. I'm really blessed to have you guys. You take care now. See you soon. Bye-bye. Bye.